Hi, Ivan from the EV Stock Channel here, and welcome back. In today's episode, I'll be giving you guys an update on how Tesla and other auto manufacturers are progressing through the current series of events. Starting off with Ferrari, and before I go into specifics, let me give you some background. Starting with sales, and we can see that Ferrari have been growing their sales at around 6% annually. Revenue and net income have also been growing at a steady pace since 2015. Where things really get interesting is that Ferrari only has $1 billion of cash on hand. Now, $1 billion for Ferrari is just fine in normal market conditions. However, Ferrari do have two factories that are located in northern Italy, in Maranello and Modena. And on March 15th, we heard that Ferrari will be stopping production. But for how long? So why am I looking into Ferrari? Well, it's because I found some interesting similarities with Tesla. Neither company pays a dividend, which is a huge advantage in the current situation, and neither company pays much for advertising, if any. And check this out, while new car sales took a major hit during the global financial crisis, check out Ferrari sales over that period. Up 1.8% during 2008, down only 5% in 2009, and then up again a further 3.3% in 2010. Tesla and Ferrari do have strong demand for their products, and are in a situation in which demand has exceeded supply historically, and this is one of the reasons that sales will reduce at a slower pace than most other lower cost brands. In comparison, the auto manufacturers selling lower cost cars will struggle more, as people that buy lower cost cars usually are hit harder with major economic downturns in the economy, as risks of job losses or reduced work is more than enough to delay new car purchases or make them switch to buying a lower cost used car. So while it's likely that sales will drop less for Tesla and Ferrari in comparison to other auto manufacturers, the biggest issue for Ferrari will be how long will production be shut down with both of their factories located in northern Italy. Tesla, on the other hand, have their Shanghai factory operational. The other thing to consider with Ferrari is they don't have any near-term plans to make an EV, with reports stating Ferrari won't produce an EV until after 2025. However, as a niche brand, this won't have much of an impact on them in the short term. When comparing price to earnings and forward price to earnings ratios, we can see that Ferrari is substantially more expensive than most other auto manufacturers, with the exception of Tesla. Next, we can see that Ferrari has $1 billion in cash on hand and $4.4 billion of debt. This may look a little concerning at first. However, when we look at Ferrari's debt of $4.4 billion to its market cap of $26 billion, we can see that Ferrari would have no problems raising more cash, if needed. So in summary, Ferrari have shown stable growth over the years with a high demand for their product. Fairly stable revenue and profit growth. Cash on hand is a slight concern with just $1 billion in cash on hand. Debt levels of $4.4 billion are manageable, especially when you consider Ferrari has a market cap of $26 billion, so no problem for Ferrari there. They aren't doing much on the EV front, but then again, people aren't buying Ferraris to save money on servicing and other related costs. So in the short term, this won't be a factor. If there's a downturn in the economy, their sales should be okay due to the high demand for their product and won't be as affected as other auto manufacturers. However, having both factories located in northern Italy will be a major challenge. And if worst case scenarios come true, there is absolutely no way the Italian government will let Ferrari go under and would likely give them some sort of support if it came to that. So that's Ferrari. They've got some good things going for them, but they've also got some interesting challenges, especially over the next 3 to 6 months. When we look at other auto manufacturers, we can see the same story across the board, in which just about everyone is shutting down production plants across the world, with the exception of Tesla in China. But the big news from last week was that Ford was cutting dividends and drawing down credit lines. So let's take a closer look at the numbers here. Ford's debt has just gone up from $155 billion to $170, while their cash position has gone up by $15 million to $52 billion in total. This, I believe, is a good move, as if they're going to need this money, now is the best time to get it. Credit lines can easily dry up if the situation gets worse, while they can repay the loan if they can weather the storm without taking too much of a hit. But Wall Street is seeing this as a bit of a panic move, while investors that held Ford stock purely for the dividend are now long gone, as Ford's market cap has dropped from 30 to 19 billion. Ford stock has dropped from $9.20 to $4.33 since the start of February. That's a 52% drop. Here are the debt to market cap figures from March 7th, in which we can see that Ford had a debt to market cap ratio of 5.9, and now, as of March 22nd, Ford's debt to market cap has increased to 9. And with the pullback in stock prices across the board, Daimler's debt to market cap has also gone up to 7 now, so there'll be another one worth watching over the coming weeks. So in summary, it's interesting to see Ferrari's situation, as they are right at the epicenter of the current crisis, while Ford on the other hand has made a big move in raising funds, but considering how close they came to bankruptcy in 2008, they know this event could test their existence and are doing all that they can to have as much cash on hand to weather the storm if worst case projections come to fruition. So stay tuned, I'll be bringing you guys more analysis as events unfold. And yes, I'll be analysing other auto manufacturers in the coming weeks. Now, a huge thank you to the Patreons. Your support is making a huge difference at a time when a lot of videos are being demonetized. And a big shout out to Andrew, Andreas, Inku and Kirk. Thank you. As always, all content in this video is my opinion only, and I do not recommend buying or selling any financial instruments. So till next time, I'll see you guys soon.